Today, Bitcoin and other cryptocurrencies jump as Vice President Harris gives new details on her crypto policies. Donald Trump's crypto project, World Liberty Financial, says 100,000 people have been whitelisted ahead of the token's launch on Tuesday. And Samara Cohen of BlackRock discusses crypto ETF adoption from permissionless in Salt Lake City. Bitcoin climbing nearly 6% by noon Eastern. The cryptocurrency crossed above $65,000 for the first time since the end of September. Ether, meanwhile, gaining nearly 8%, up to $26.34, and Solana jumping 7.8% to $156. Okay, let's talk about the top stories. Vice President Kamala Harris is revealing more on what digital asset policy could look like under her administration. As part of her economic plans focused on Black men, the VP pointed to the significant crypto investments among the demographic. She vowed to support a regulatory framework where investors would be protected, and her agenda says that more than 20% of Black men either own or have owned cryptocurrencies. It also mentions that Harris, quote, appreciates the ways in which new technologies can broaden access to banking and financial services. The crypto industry has been pushing the vice president to make her stance on crypto clearer, with less than a month until Election Day. Next, Donald Trump's crypto project, World Liberty Financial, is set to launch its token on Tuesday. Now, there are still a lot of details that we don't know about the project, such as the full utility that it would provide holders, but World Liberty held another X Spaces event Monday morning, where the group reiterated some points already laid out in previous meetings. WLFI is a governance token that allows holders to vote on decisions for the DeFi protocol. The token is a Reg D offering, meaning that the company can raise capital without first registering their securities with the SEC, but that also limits the size of the sale and the types of investors who can buy in. Now, to that end, co-founder Zach Folkman announced in the Spaces that well over 100,000 people are on the whitelist ahead of the launch, and that a roadmap for the project would also be released on Tuesday alongside the sale. All right, let's talk about permissionless for our main story. The crypto conference put on by Blockworks and Bankless took place in Salt Lake City last week, and I got the chance to lead a discussion with Samara Cohen, the Chief Investment Officer for ETF and Index Investments at BlackRock. Here's part of that conversation from Salt Lake.
We've seen $19 billion in total net flows. I feel like the first few months we had this blockbuster reception, a lot of activity, but there's a lot of pent-up demand. And my question is, you look at who has been involved, and it's a lot of retail investors who seem to be buying in. So talk to me about the current composition. Like, who are your current customers? And then we can talk about where that pent-up demand is and who's going to enter the ecosystem next.
Sure. So look, I listened to the great ETF debate before because I thought I should, and I was pretty sure that when we had this conversation, I was going to say, yeah, what those guys said, I totally disagree with, which is why I listened. But actually, I pretty much agree with what was said in that conversation, which is that, you know, go back a year in time to what we expected. We expected that there was all of this pent-up demand, which is why it was so important to launch Bitcoin ETFs. What we have actually seen is the demand was particularly for a better way to access Bitcoin. It was for the ETF wrapper. So the stats that you heard, I agree with those stats. It's, first of all, we know from the 13F filings that most of the buyers of Bitcoin ETPs, and I should say ETPs because technically, legally, I'm not a lawyer. They're an exchange-traded product, not an exchange-traded fund. But about 80% of the buyers are direct investors. And we've known that since the 13F filings started coming out. The other thing we know now, and I know this just for IBIT because it's data we look at, and we don't have the data yet for ETHA, but of that 80% direct investors, about 75% never owned an iShare before. So we went into this journey with the expectation that we needed to educate ETF investors on crypto and on Bitcoin specifically. And as it turns out, we have done a lot of education of crypto investors on the benefits of the ETP wrapper.
Which goes, I mean, it's certainly an endorsement of the ETF wrapper in terms of onboarding people into the ecosystem. But as you point out, you had a lot of people who were already crypto investors who potentially already had exposure through your centralized exchanges like a Coinbase, who were then entering the ecosystem, the TradFi world, to then custody their crypto holdings. And in terms of this next stage, because as you said, these 13F filings have been pretty illuminating in that we're not seeing, I mean, you're seeing tepid investments from hedge funds, and then a lot of the shares that are held by banks, those are wealth management clients that are asking to add that to their portfolio.
That's right.
And so this, again, going to this idea of pent-up demand, like when are you going to, what is standing in the way of banks themselves buying these shares and putting it on their own books? Let's parse apart, like, is it the repeal of SAB 121? Like, what's the holdup?
So you guys have heard a lot about this over the course of the day, but there's no question, particularly in the United States, clarity and a regulatory path forward for crypto assets is critical, really, for the art of the possible here. Like, if I think about it, and I do want to share like a little bit of TradFi history, because I think it's incredibly important for this audience that is, you know, maybe newer to ETFs to realize that in a lot of ways, ETFs and blockchain technology are solving for similar things. ETFs have been a decentralizing force in TradFi markets that have brought a lot more access and transparency, and importantly, really accelerated in growth during the post-crisis 2008, 2009 period. So I find it incredibly meaningful to look at the fact that the blockchain white paper was published, you know, on October 31st, 2008. Then you have the G20 leaders from around the world meeting to discuss the aftermath of the financial crisis and how do you create more transparency through public reporting, less risk through counterparty clearing and multilateral trading. And in TradFi markets, those created huge tailwinds for ETFs. And then at the same time, DeFi is, you know, becoming a reality, as it has, you know, over the intervening 15 years. So it was interesting to hear, like, was this a win for Bitcoin? Was this a win for ETPs? And to me, the answer is it's a win for investors to the extent we can effectively marry these ecosystems, which are solving for the same goals.
And so I was talking to Representative Emmer backstage just a little bit before we came up here, and he's very confident that we're going to see the repeal of SAB 121. And from the conversations I've had, that's really the big thing that has to happen for banks and larger financial institutions to get comfortable with having more crypto exposure. And so, you know, and I think that part of that trepidation comes from this, you know, narrative, at least within the crypto ecosystem, of choke point 2.0. My colleague Nick Carter has done some great reporting around what appears to be the forced closure of Silvergate and Signature banks. But again, it just goes to this idea of risk level and risk appetite. So from your experience, the conversations that you're having, what do banks and other institutions, some hedge funds have exposure, but we're not talking about big sums here, at least when I go through the most recent set of 13F filings. What will it take for that floodgate to open, for more institutions to get invested?
Okay, so there's a whole lot wrapped up in that question, so let me just unpack it a little bit. When I think about institutional adoption, it's both on the infrastructure side and the investor side. On the infrastructure side, to your point, it is about that regulatory clarity for market participants like banks with respect to SAB 121. We're talking about custody. I think it's broader exchange support and ability to actually trade coin, which a lot of traditional market makers, broker-dealer market makers can't do right now. That is also important. So there's kind of the whole market structure liquidity provider side, which will create capacity for institutional demand. Institutional demand kind of, to me, breaks down into three different parts. To your point, it is hedge funds who are absolutely involved already, and you guys heard some stats earlier, but there are things like basis trades that have actually specifically looked at, look at relative value, which is a great way that you start integrating and seeing value compared across different types of market access vehicles, futures, exchange-traded funds, spot, et cetera. So there are hedge funds who are active in basis trades. There are a handful of asset managers who are making allocations to crypto, Bitcoin specifically, as kind of the liquid alts part of their portfolios. But then there's this bigger category that I would consider asset owners, like pensions and endowments, where there's actually a fair amount of plumbing still to unlock their ability to buy Bitcoin. It could be, again, what is the financial position of the fund? Does it make sense to have a Bitcoin allocation? And if the answer is yes, Does state law permit the pension fund to buy Bitcoin ETPs? Do their investment guidelines? Does their board? And these things take a longer period of time. So all of those steps kind of, and this is a process that is underway, but it will be we are in early, Act 1 of this play.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.